Hey everyone, me Kevin here. Last week, the Federal Reserve made huge waves with their suggestion that they would allow inflation to run slightly above their 2% targets going forward. This basically meant their money printer is going to keep running hot for the next 5 years. They're going to keep printing the green, and the stock market going to keep going up and up and up, and real estate just going to go to the moon. Basically, the last 10 years may have been the decade of quantitative easing, and now we are at quantitative very easy. And the money is flowing big time. This is obviously good for stocks and real estate, or it's just blowing up an even bigger bubble, who knows. Basically, if you're investing, right now you're starting to feel pretty green. However, the Federal Reserve just released a new warning. At 1 p.m. Eastern Time this afternoon on September 1st, the Fed issued a new statement. And folks, for this one, you're going to want to make sure that you have your life insurance in as little as 5 minutes via the link down below. It's what I have, it's what Lauren uses. And if you want one free stock worth between $8 and $1,600, you can deposit $100 with Webull, and they'll give you this totally free stock worth between $8 and $1,600. So, the Federal Reserve stated in a press release that we should be cautious of a downward spiral. That was their word. See it here, I'll put it up on screen. They said it first, not me. Downward spiral. Here's basically what they meant in their 10-page release. I read all of it. Here's the gist of it, so you don't have to. This is why you subscribe, right? Anyway, here's what the Fed believes in terms of a downward spiral. They say, 1, inflation will likely stay low over the next 5 years. This is mostly because while the Fed is stuck at a zero interest rate and doesn't want rates to go negative, all they can really do is print money and pray that inflation goes up a bit. They're kind of stuck and they're just waiting for inflation to go up. But it's not right now. And that's why they think it'll take 5 to maybe even 10 years to start seeing this inflation again. This decade might be a very low inflation decade. Now, yes, every time I talk inflation on this channel, there are individuals who comment that inflation is all over the place. Just look at food prices. And the inflation measures don't even read food prices. This is half true. The Consumer Price Index excludes measuring food. And yes, food prices have gone up. But the Fed doesn't look at CPI, the Consumer Price Index. Instead, they look at something called PCE, the Personal Consumption Expenditures. Basically, their measure of inflation includes food. And even when we include food, overall, we're seeing very little inflation. And remember, some inflation is good. It helps people who invest in businesses, and it takes, people who take on debt to grow their businesses or assets, and it helps them pay that debt off faster over time. It's good for society. It lets us grow more and grow faster. Some inflation is good. Number 2, this is part of their downward spiral. Number 2, because the Fed, though, is stuck at a zero interest rate lower bound. They don't want to go negative. They can't drop rates anymore. We expect inflation to stay low overall, and we expect interest rates to stay low as a result. Number 3, this means we end up borrowing more and more and more and investing more and more and more. This means we kind of start getting a little bloated with more debt. Number 4, while inflation stays low, and stock and real estate prices go up, the rich get richer and the poor stay poor. Because if you don't own stocks or real estate, you're not on the roller coaster. Number 5, because low inflation means low rates, people might also not only take on more debt, but they might take on more risks. Now, America is the land of opportunity. America is the place to take risks, but it could get to a level of carelessness where we take on way too much debt. Now, overall, so far so good. I mean, if you're going to take on debt, you may as well do it when rates are cheap. If that means you can grow your business, great. You can invest, that's good for society. That means you can hire more people, that's good for society. Stocks and real estate prices going up, that's good for people who own stocks and real estate. It makes it a little harder for other people to get in, but it tends to be a nice ride to get on. So what's the problem? Well, the Fed is worried about the future, and they're panicking. When inflation finally starts to happen in the future, and they decide to raise rates, who's going to get hurt? Well, a lot of people are going to have a whole lot more debt. And all of a sudden, people are going to be fat with all this debt because they've been drinking from the easy money punch bowl for so long and they're fat and happy. But when rates go up, all these fat and happy corporate bosses all of a sudden have to start cutting some more checks because of higher interest payments. And guess who gets the axe? It's not the corporate bosses. Maybe they'll borrow less money because money just got more expensive. They'll usually start cutting low-paid and lower-skilled workers, AKA while people who are investing in stocks and real estate are getting fat and happy over the next probably 5 to 10 years, and the people who are not investing in stocks and real estate are getting screwed, when the party finally ends and the Fed finally starts increasing interest rates towards the end of the decade or after the next 5 years is their expectation, it's not going to be the people who are borrowing in stocks and real estate who are going to be in pain. It's again going to be the people who missed out on the ride with lower paying jobs who will get doubly screwed. Missed out on the roller coaster, and then they'll get fired. I'm oversimplifying, obviously. When you read the 10-page report, your eyes start crossing because they say things in such a complicated manner. Let me make it very simple for you. Anyone in hospitality, women, blacks, Hispanics, anyone who makes low wages, they use those demographics, is going to get screwed. And that's very dangerous and bad. So if you haven't caught the drift yet as to what the Fed is saying, whether or not you believe them is on you, but it's what I'm doing, this is exactly what all of us ought to be doing. Number one, consistently buying stocks. That's a good way to start. Have less money in high-yield savings accounts, more money in stocks. I am more aggressive. I advocate 2 months of cash in the bank. Everything else goes into stocks and real estate. Because guess what? Your stocks and real estates are a form of an emergency fund. Even if they drop in value, they still have leftover emergency fund capability. The odds are you're less likely to sell your stocks and your real estate to splurge on stuff, which you might do with a savings account. So I recommend starting with a diversified group of stocks. Start with some of my favorites if you want. For example, you could go to metkevin.com, 1337V6. We're on version 6. You can see the links for that down below just to give you an idea. It gives you around 35 to 45 stocks to start with. You can also create your own basket if you want. Heads up, some of the returns on M1 Finance are a little buggy right now. They're all looking negative because Tesla and Apple split. And I think M1 Finance is like, why is everything dropped? It's just bugged out right now. But if you do want to sign up for this bugged out platform, you can get $20 just for signing up and depositing $100. Anyway, the second thing, buy real estate. Start with your house. Move into something. Take advantage of these low rates. If you don't know how to do this, I break it down for you completely for free. Yeah, I have a real estate investing course, but you don't have to pay for anything. I will link it down below as well. Basically, you could also just search for it on YouTube. It's Meet Kevin, How to Buy Your First Rental Property. And it starts by you moving into the home. So whether you're a home buyer or looking for a rental property, watch that video. It's extremely detailed, a ton of value in that video. Number 3, if you have a low-paying job, you gotta get a better job. And I know that's easy to say, but take it from me. I worked at Hollister, then I went to Jamba Juice, then I went to Hollister, not Hollister again. I went to Red Robin, but it felt like Hollister again. Anyway, I jumped around low-paying jobs. I get low-paying jobs. And I realized no matter how hard I worked at these jobs, I wasn't going to make more money. It just wasn't going to happen. I had to do something better. I had to have a skill. I had to provide value. Think about it. Licensed lending, licensed contracting, real estate agent, programming, 3D scanning business. I'll link a video for a 3D scanning business idea down below. Type it in. How to make $200 in 15 minutes. It doesn't matter. We got to get you out there making more money. The Fed is also giving us a very reasonable warning here, except most people don't watch this. So in my opinion, consider yourself fortunate for watching this video. And I'm not trying to pat myself on the back. To say, oh, you should feel fortunate you're watching. No, I'm not trying to be arrogant here. I'm just seriously trying to say you clicked on a video about the Federal Reserve. There's something special about you that 95% of people are like, Fed, whatever. Take advantage of the hint. Now, sadly, the Fed is throwing up their hands, realizing, wow, we're trying to help poor people, but all we're doing is making poor people poor. While people with stocks and real estate and good jobs get richer and richer and richer. And folks, that's the world we live in right now. And I know there's all this talk about, oh my gosh, but that big bubble, it's going to be so painful. There's going to be a big reset and we'll be able to get in then. Well, that's not what happens in a crash. Look at the pandemic, folks. When the crash happened, who were the people who were most positioned to be able to take advantage of the cheap prices? Folks with stocks and real estate. Why? Think about it, folks. When the crash happened in March, starting around March 6th, I instantly go to refinance 4 properties. I got money in the bank within 30 days. Bottom of the market, I start buying stocks like crazy at the end of March and the beginning of April. All those stocks have like doubled and tripled since then. Why was I able to do it? Because I already owned assets. Yeah, the stocks I owned went down 50%, but that's okay. I was still in a position to be able to buy because I was able to pull money out of real estate. This is why I like having stocks and real estate, because they don't always hit bottom at the same time. So you get to play with both of them. Anyway, hopefully you ask yourself right now, what can you do to build wealth? What can you do to build your income? Focus on that. Consider subscribing, get your life insurance, check out the programs down below. And folks, thank you so much for watching. We will see you next time.